So if you were on the Tuesday talk, or the Talk About It Tuesday on Tuesday, you know that we had some issues with the sound. And by issues, I mean, I sounded like Charlie Brown's teacher. So I decided to, well, I'm not exactly sure what's going on here. I decided to redo it so that you would at least have the information at your disposal should you need it. I just wanted to offer the disclaimer that I am not an attorney, so I'm not giving you any type of legal advice or these are all just suggestions of how to do net sheets. So I will tell you that I have a new microphone. So there's that. I bought it for podcasting purposes, clearly. Just kidding. That's not going to happen. So I bought it strictly for this because the sound was off and that was a horrible experience for everyone. So let's get started. It's net sheets for the faint of heart, and it is for the faint of heart because you can be scared to death of net sheets and it doesn't matter. We've got you covered. And that is because right now in the times that we're in, like I'm not going to do long division or try to figure out, an amortization for a mortgage and not use a calculator, right? So I use the tools that are given to me just as a basic adult, right? But as a realtor, you also have those calculators available to you, you can go on any website, pretty much if you typed it in, like I need a net sheet calculator, you can go. Of course, we have one at Sunbelt Title, and I'll show that to you. But what we want you to know are the reasons behind the numbers. We want you to know how the taxes are prorated and how you can confidently communicate the numbers to your clients so that as you're at a listing appointment, you can say, well, these are the reasons that we put this number in here and why we're giving this estimate specifically. So the basics about net sheets. And I love to think about, I always had a hard time with like net and gross when I was younger. Like what's gross is obviously the whole amount, like it's going to be everything, but the net is like what you end up getting. And I always had to remember it. Like if I had a net, it's what I would end up with. Like if I were fishing, so it was like a fishing net, like what's in the net is what I end up with. So that's how I always have to remember that. I don't use it, if you will. Or don't. Anyway, so it's basic math. It's the sell price. It's what is being offered, and then it's going to, or what you're offering the listing as, and then also anything that needs to be paid off at the time of closing, closing fees, commissions. It's going to include a lot of other things, and we're going to go over that. But the rest of it is all what's left over for your clients. You're like, yeah, I know that. Well, I'm glad that we're on the same page then. So a few of the things are some of the things that show up as debits, and this is not all inclusive. This is just some examples of things that are most typically on net sheets. One being the primary loan payoff, if there is one. Two, the payoff penalty, and we'll go over that in just a minute. The second loan, if there is any, or any additional loans, home equity loans. Any concessions that your seller is willing to do, title insurance, outside services, real estate services, that's you, the commission, and taxes and HOA. So we're going to go into each one of these a little bit more, but the primary loan payoff is going to be that mortgage. And the reason that I wanted to spend a little bit more time on that is because as you're going into a listing appointment and trying to figure out what their payoff might be, right? Because maybe they don't know exactly. You could always look at when they actually bought their property, and you can look at a historical data. I say that historical data calculator for interest rates, and you can try to best guesstimate what, if they have made timely payments, what they would have paid off if they were only making single payments, and how much that would would be now. And you can put in a round number. It doesn't have to be exact. So just consider that. I know Dave Ramsey has a really great calculator that shows historical data. So what it would do is like, okay, if you bought your home in 2007 and you paid $175,000 for it, and this is and they got a loan for $150,000, this would be the likely the median interest rate at that time and how much they would have paid off it up to now. So just keep that in mind. Now, I also put on here a penalty to pay off early, because there are times that when you get a mortgage or any loan really, and you pay it off early, we don't talk about this a lot, but if you pay it off within, I think it's 12 to 18 months, it's going to depend on the lender. Sometimes there's a penalty that's attached to that, because the people that the loan originators, that's how they make their commissions, is off of that interest, right? So if you are already cashing that out, paying that off in some way, there may be a penalty associated with it. So that'll be something that if your clients don't know, we'll figure that out as the title commitment comes back. So no worries on that, but just know that could show up as a debit. So there could be a second or third loan, right? So if your client has equity in the property and they have decided to get home equity loan or a line of credit on their account, on their home, on their property, that's something that could show up that would need to be paid off at closing. If they have a roof that hasn't been paid off, or solar panels or anything like that. Now, I have had people reach out to me about solar panels specifically, and if it will always show up as a debit on a net sheet, or if it's something that has to be paid off, if it's and what goes into that. And we're actually going to do an entire talk about that, where we're going to have somebody from solar panels, insurance, we're going to have obviously title, a mortgage lender, and we're going to talk a little bit about and a roofer. And we're going to talk a little bit about like what goes into that transaction if there are solar panels on, and what the differences are between the different companies. So stay tuned for that. I'm not sure what date that's going to be, but we are going to do that because I had requests for that. Now another, this says concessions from buyer, but it's supposed to be seller. So just ignore that. This could also show up as a debit. Now, over to the right-hand side of the screen, you're going to see that I put some of the limits that have been set for like VHA, VA, USDA, Fannie Mae, all of those, and like what the limits are that your sellers can basically incentivize the sale of that property, how much they can do. So I just put that as a nugget. I'm not a mortgage lender, but I put that there because, well, I had the information and I thought it would be useful for you. So about 40 to 50% of people that are listing their homes do offer some type of incentive or concession. So just keep that in mind when you go to your listing appointment. Those things might include the closing costs, which we'll go over in a minute about how to calculate that, but or just reach out to me. You can also even do part of the financing. So you could do closing costs, repairs. You could do personal property if you're going to convey the washer and dryer, which has happened in our house, thank goodness, because our old washer and dryer where we were living, it was not great. So that worked out really well for us. You know, it could be the refrigerator. It could be, well, you know, and when we bought our house, we ended up with, what do you call it? He's not listening to me. My husband's on the couch. It's not a tractor. It's a bulldozer. Sorry. I had to think what it was called. We ended up with a bulldozer. So that was something, wasn't necessarily in the contract, but we got it. Anyway, so another thing that could show up as a concession, or that you might offer or help them offer as a concession, would be part of the financing for them. And that's come into play more often as of late, because of the higher interest rates that people were seeing after the very low interest rate. So I say higher, but I don't mean historically higher. I mean higher than it was a year and a half ago. So some of those concessions might be like the 2-1 buy down that you guys have probably heard a lot more about over the last 6 months. And that's what you can basically buy a lower interest rate for them for 2 and then 1 years. And so lenders can talk to you about that more in depth, because again, I'm not a mortgage lender, but that could show up as a concession. So I'm going to just leave that there. So let's dig a little bit deeper into the title insurance and the closing costs. Obviously, there are calculators for that. We have tools, and we are very proud of our tools because we spend a lot of money on them to make sure that they're prorating things correctly. So, but we want to make sure that you know what goes into the actual title insurance cost. And so we are one of 3 states in the country that our rate for title insurance is regulated by our state. We have title insurance agencies we're required to participate in what we call a data call each year to make sure that the rates are fair every single year. Currently, love you. I love you too. My husband's looking for work. Currently, sorry, it was very distracting. So currently our rates are set at, for the first $100,000, it's $5.75 for every $1,000. So that being said, there isn't, the lowest that can go is $100. So that's going to be the minimum for our title policy. So unless it's less than $100, like if it showed up and it would be less than $100, then obviously we would still charge that $100. That's the minimum. But for anything from $0 to $100,000, it's $5.75 per thousand. So if it's $100,000 house, it's $575. Pretty basic math. But then if it's a $300,000 house, anything from the 200, after that first $100,000, the 100,000 mark to the $1 million mark is going to be $5 for every 1,000. So if you take that first 1,000 for 100,000, it's $575 for that first part of that policy. And then the second part is going to be that additional $200,000 is going to be at a rate of $5 for every 1,000. And I put a chart down there. So, because I know that's a little bit of, it's a lot of like math and like who wants to do that. But I wanted you to understand what goes into that, because it is regulated. But there are services that you can shop for. For example, you can't shop for services for title insurance as far as the actual rate, but you can shop for title services for the settlement fee, the lien, the title search, the municipal lien search fee. There may be additional fees, like there may be a courier fee. We don't do those things, where ours is just all inclusive, but you can't shop for things like government and doc stamp fees. You can't, because those are obviously things that we're paying for. We're not going to put any additional cost on you. There is a difference between the owner's policy and the lender's policy. And I was asked about that prior to the class that I did on Tuesday, and I tried to explain it. However, you couldn't understand a word I was saying. So I will explain it again. So an owner's policy is going to protect the owner, and it's going to be the value of the home. It's going to be the full value. So if you bought a home for $100,000, your owner's policy would be set for $100,000 or $575. Then if there is a lender involved, so it's not a cash transaction, and you are the buyer is getting $75,000 from the lender. So they're getting a mortgage of $75,000. I don't know why I'm using such low numbers, but you get it. The lender's policy would only cover to that amount. And then it would also be much lesser, a much lesser amount, because it's going to be a simultaneous, the policy is going to be issued simultaneously. And so we offer, not just us, but everybody in the title insurance world offers a discount for that. I need to take a drink really quick. Sorry. And yes, I drink soda in the morning. That surprises people. I don't know why. It's a whole, I do. I'm sorry. So I'd love to go in more depth about the owner's policy and lender's policy, but not today. Outside services are also going to show up as a debit on the account. If you're providing a home warranty, which in several of the purchases that we've made, that has been like a gift from our real estate agent. But if that's not going to be, it would show up as a debit. It could show up as a debit. So if that's a concession that they're offering, basically, or if they're helping with a survey, or whatever the case might be, that the outside services would also show up on there. Now, I will tell you, just because we're talking about home warranties, I am, because you're not here. So home warranties, I do not sell home warranties. So I say this because it's been told to me, but again, I'm not an attorney and I don't sell home warranties. So I'm going to tell you what I have been told. And that is, if you are not telling your clients that they have an option, your buyers, that they have an option to get a home warranty policy, it could come up as an E&O claim later on. Take that for what it is. My advice on that is just protect yourself, like make sure you're doing everything you can in your due diligence to protect your clients. Bottom line, that's just a basic ethical thing to do, right? So your real estate services are also going to show up as a debit for the sellers. And that is going to be somewhere typically around 5 to 6% commission, because that's what our average is here in Northwest Florida. It's usually a 2.5, 3.5 split, or a 3-3 split. So it's however you negotiate that. All right. And then the taxes in HOA. This is always just a really, really fun conversation, because it can get very confusing. But I want you to think about it in a way like when you're doing, when you're trying to figure out, and you don't have to do this, remember, because this is why we have calculators. But again, we want you to know what goes into the numbers. When you're doing a net sheet and you are putting in an amount for what they could be paying for taxes, this is a two-parter, right? So one, we want you to know how we have to do it. And two, we want you to know how to best advise your clients. So the first thing is, as we're doing a quote for you and we are working out the numbers, we have to go from historical data. We can't make up a number. And that historical data, so the taxes from last year, the property taxes from last year may include exemptions. And those exemptions could be 100% for someone that is 100% disabled from, military. It could be a homestead exemption. There could be multiple exemptions that lowered that tax rate. And that is going to be in our calculations, because we can't just make up a number. However, if you're trying to set them up for success, you can always go to, every county has an estimator to find out what their estimated tax would be based off the sale price. It is a little bit, it's always a guesstimate there. It's an estimate, because it's typically a lot more than what the actual assessed value is how the county assesses it. So just keep that in mind. That's how to protect your clients when you're trying to figure out a rate for them. Just go ahead and do that due diligence as well, because if the numbers are very different, or if it hasn't been assessed, and they didn't in 20 years, then like, it's not that it would not be assessed, but if there's a reason that, for example, we had a client who was paying $180, and it was just like for the fire and stuff, the abralarum, I think that's how you say it. I probably mispronounced that because I don't have to say it very often. Abralarum fees, which it's it's the stuff that you can't be exempt from. It's like the fire and stuff like that. So they were paying that for 20 years. They've been in that house. It's not that the house hasn't been reassessed. It's just that they were never they had a 100% exemption. So we had no idea what the taxes were going to be on that house. We can go to the estimator, but we can't use an estimator to actually put on our Alta. It has to be real numbers. So anyway, I went off on a tangent there, went down a rabbit hole. Sorry about that, but I'm going to give you an example of how we come up with that rate. And again, all of this is done very easily in our calculator and you don't have to worry about it. But I'm going to tell you. So let's just say the previous year's tax bill was $3,250. And we have a closing date set as April 4th. Just keep that in mind. Because we pay the taxes at the beginning of November, like they're not due until March 31st, but as soon as the tax bill comes out, that's being paid. If the tax bill is paid at the beginning of November, there is a 4% discount. So we go ahead and include a 4% discount as we're trying to come up what that rate will be, that prorated tax. So we take that 4% off the $3,250, and that leaves us with a $3,120 tax bill. And then we say, okay, there are 365 days in the year. So we take the 3,120 and then we divide that by $365 days, come up with a daily rate. And then we take that daily rate and we use that to determine how many days, we use that to multiply that however many days that the owner, the seller, in this case, the owner has lived in that house. And then we multiply those two numbers. So it's April 4th will be 94 days. We take 94 times that $8.55, and it comes up with $803. And that is the amount that would show up in the calculator. So the owner would have a debit of roughly $800, and the buyers, words early in the morning, buyers would have a debit of $2,300, or what we need to go into escrow as part of their mortgage is going to be a $2,300 that has to be distributed over the course of the year so that can be paid. I'm going to move on from that. I don't always explain that really well, and I usually have Erin as a backup, but obviously she doesn't live with me, so there you go. So I have included some links here to where we go for each county that we service currently. This is their property where we would find the property tax bill from the previous year. I am going to sign off now because, for one, I'm losing words and I need to drink coffee clearly. So, but I hope this was helpful. I know this was the second run through. It's kind of strange doing it by myself and not having anybody to conversate with. But again, I hope this was helpful, and I will see you next Tuesday as we look at who signs what. Bye, guys.